Inflation and real estate. I'm Will Burgess, and today we're going to talk about inflation, the impact of inflation on real estate, and more importantly, what we can actually do about it. So to get things started off here, let's talk about what inflation actually is. The economic definition of inflation refers to a general progressive increase in prices of goods and services in an economy. That's great, but I don't entirely agree. I think that it's not so much an increase in prices so much as it is the devaluation of the dollar. Now there's an important distinction there, but I'm going to continue a little bit and give you a bit of a history lesson.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
In 1971, when Richard Nixon took the US dollar off the gold standard, what ended up happening is the US dollar was no longer backed by gold, it was now backed by the goodwill of the people of the United States. This is important to understand because the Federal Reserve, in order to maintain that goodwill within a global economy, they had to put in certain checks and balances to keep inflation within roughly 2%. So the three levers they have available to them are first, the federal fund rate. That's essentially the rate at which the Federal Reserve lends money to the banks. The banks can't create money on their own. What they do is they go to the Fed in order to borrow that money, and the Fed charges them an interest rate in order to lend them that money. Now, if the Fed raises the rate, well, the banks aren't going to eat it. All they do is pass that increased rate charge down to the end user. So that gets passed down to you and me, and more so, it affects the mortgage rates that we pay. So that'll increase or potentially decrease the performance of our real estate investment. The second lever they have at their disposal is the Federal Reserve requirement. Now, each bank has a requirement to keep a certain amount of money in cash on reserve. Right now, you're looking at a roughly 9-to-1 ratio, meaning if I walk into a bank and put $100 in a savings account, the bank can turn around and actually lend out 90 of those dollars. On a side note, I'd like to point out that the banks do have a couple of workarounds here which effectively allow them to lend out money infinitely. Even though this is one of the levers that the Federal Reserve advertises, it's not a very effective one because of these workarounds, but that's a topic for a whole other video. The third thing available to the Federal Reserve is a monetary supply. We've seen this in action a great deal over the last couple of years. In fact, the government has been printing money like crazy. And this has directly led into my investing paradigm moving forward. So let's talk a little bit more about that. What is the impact on real estate in terms of all this inflation stuff? Well, the reality is because there's so much money that has been printed, not only that, it's been very difficult to spend the money because the economy has essentially been shut down. So people's savings have increased because they haven't had the ability to spend it the way they want. We've had record low interest rates, and now we have an excess in money, and we have the inability to spend it, which has meant a lot of these funds have been driven into the real estate market, and we've seen an increase in real estate prices. This stuff has been happening real time right now. There's still time to get into the real estate market, and we're going to talk a little bit more about that when I talk about what it is we can do. But just know that we have a record low inventory of homes, and we have a staggering increase in home prices. You'd tend to think that one of the solutions would be to add more inventory, i.e. build more homes, but the problem is because inflation has been increasing, the cost to build these homes is also going to be increased. So all in all, we still end up in the same place. Now let's talk about what we can actually do about this whole situation. Now, if we look at the market as a whole, my advice to you is to buy physical assets. Get away from cash. The cash in your bank account is decreasing in buying power by the minute. So you do not want to be holding on to cash right now. You want to transfer that cash into physical assets, physical goods, things that historically have appreciated in value. To give you an example, gold would be a good one, although I'm not a huge fan of gold simply because it doesn't produce anything. It's a great hedge against inflation because as the dollar drops in value, respectively, the gold price increases. You can park your money there, but it doesn't create anything. That being said, if you have the ability to invest in some sort of manufacturing company that creates something real, something that is in demand, well, that would be a great place to invest in right now, because as the economy keeps moving and there's a demand and there's more money chasing these goods and services, you're going to see an increase in profitability within that sector. Now, even things like Bitcoin are arguably going to be pretty successful. Now, there's a lot of speculation surrounding that, so I'll leave that one alone, but I'm going to focus on my favorite type of investment, which is real estate. I think this is going to be a fantastic investment moving forward. Even though prices are at record highs, I don't think they've topped out, and I still think they offer an incredible ROI. Now, the reason being is twofold. One is we're parking our money in something physical. You can see it, you can touch it, that's all great. Two, it's providing a service. People always need housing, at least specifically in my case, because I invest in residential housing and apartment buildings, that sort of thing. But not only that, in the commercial real estate sector and the industrial real estate sector, you're still providing a service. Now, beyond that, we have the possibility to leverage this asset. We're not going to the bank and saying, give me $100 grand for stocks, give me $1 million for stocks. We're going to the bank and saying, give me $1 million against this piece of real estate. So we're using leverage to acquire a larger asset, and as that appreciates over time, our returns are going to be much higher. But what I really like about this is once we go to the bank and we borrow that $1 million, it's not worth $1 million anymore. Here's the genius thing about the whole process. We're paying it back in tomorrow's dollars, which are worth less. So right now, if a chocolate bar costs us, let's say $1, and 2 years from now it costs us $2 or $3, it's the same thing for real estate, and the borrowed money that is now held against this hard asset is worth that much less. So if it's $1 million property today, in theory, it would be worth $2 million or $3 million tomorrow, but our loan is fixed. It's only $1 million loan. And that means we're paying that back at a much smaller rate. The dollar in the future, we should have more in circulation, and we're paying it back with dollars that are worth less. So in theory, that $1 million should be much easier to pay off. This is what's made it such an attractive investment. I realize investing in real estate can be a little bit intimidating, but the potential for wealth creation right now is absolutely incredible. So please take the time to educate yourself. Go and check out more videos on YouTube. There is a ton of information out there. If you want something a little bit more structured, in the description below, I provided a link to my free 1-hour webinar, which breaks down the 6 steps I personally use to invest in real estate and create millions of dollars. Thanks so much for watching. Please make sure to subscribe, and we'll see you in the next video.